This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Tyler Cozzens and Brandon Dodd from the Livestock Marketing Information Center begin today's show as they explain what they saw in the recent cattle on feed and cold storage reports. K-State Extension Land and Crop Market Specialist Megan Hughes keeps the show rolling as she discusses the Kansas Land Values book and how farmers and ranchers can use it. Ending the show is a segment of Faces in Agriculture with Tana McCarter from Wilson County as she shares about her involvement and excitement in agriculture. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Monday show with a cattle market update from Livestock Marketing Information Center's Director, Tyler Cozzens, and an agricultural economist, Brandon Dodd. Tyler, Brandon, I appreciate you both taking the time to join us today.
Glad to be here. Thank you.
Thank you for having us.
And starting off, we got some reports on Friday. And Brandon, what did we see for cattle on feed?
So last Friday, the USDA National Agricultural Statistics Service, or NASS, released their last cattle on feed report for the 2025 calendar year. This report contains some specific information on the month of December and what we were left with from 2025 heading into the 1st of January this year and the new year. As always, I'll discuss the report in the context of what pre-report expectations were, and I'll also do some follow-up discussion. Getting into it, cattle on feed as of January 1st, 2026 was down 3.2% from the first day of 2025. This value was right on point with what analysts had been anticipating, which does not always happen too often, but the outcome was in the ballpark of 11,450,000 head. The loss in cattle on feed going into the end of 2025 was due to yet more losses and placements on feed during December. Last month, I discussed the continued struggles feedlots have been having as they combat short supplies amid the New World screwworm-induced border closures. Essentially, feeder cattle supplies have already been very tight domestically for some time now, and mixed in with the fact that our typically larger cattle feeding states to the south now have even less available supplies. What we're starting to see here is roughly 9 months of continual losses of placement showing up in our total on-feed supplies. What I'm getting at is that losses are somewhat inevitable when you can't find them to place to begin with. Anyway, placements in December fell about 5.4%, which was better than expected. Analysts had pegged placements down about 6.9% on average, although some more optimistic folks in that survey only had a 4.9% decline. In the end, placements last month sat at just shy of 1.6 million head. As for marketings, due to the fact that we had one more slaughter day during December, we saw an increase by about 1.8%, bringing marketings to 1.8 million head. Similar to total cattle on feed, analysts were pretty on spot here, only being off by 0.1%. Now to get into the guts of what really makes this report so special. So the January issue of the cattle on feed report contains quarterly estimates of the breakdown of steers versus heifers on feed. Especially for right now, these are very important and highly anticipated numbers because on January 30th, so this Friday, we get the cattle inventory report from NASS that will detail if we have more, less, or the same number of cattle domestically than we did in 2025. We don't have pre-report estimates for that report, at least yet. We will this week. But essentially, between this cattle on feed report and the report this Friday, we'll get an idea of whether or not heifer retention could be underway and if we're at the beginning of a new cattle cycle. All of that said, the percent of heifers on feed came in at about 38.7%, which is flat with January of last year. Also shocking in this value is the fact that it increased compared to the value reported in October by more than 0.5%. At least for now, this doesn't have me the most optimistic of seeing any substantial rebuilding being observed in the report later this week. One value economists will consider in the cattle on feed report this month is the ratio of steers to heifers on feed. This value tells us the number of steers relative to every heifer in the feedlot. Because we know that inventories are overall down for what we can push through feed yards, looking at the percentages that I mentioned and also this ratio, that can help pull some of that kind of bias out or just that noise out and paint a clear fundamental picture as to what the reproductive basis is for the industry. This report recorded about 1.58 steers on feed for every heifer also on feed. This value doesn't have me jumping over my seat about any massive rebuilding prospects. In fact, we are actually lower than the levels that we saw 10 to 15 years ago when we started rebuilding the last time. So what does that mean, at least for right now? Well, we don't entirely know this until Friday when we get the cattle inventory report, but the fundamental picture is still pretty clear. Supplies are tight and pessimism is looming with cow-calf producers on whether they should expand their herd, focus on maintenance, or downsize. If you ask my current bias about the report for later in the week, I think we're going to have somewhat of a mixed bag, with some areas seeing increases and some seeing losses. Overall, though, based on what we've observed for slaughter this year, especially with beef cows, I wouldn't be too shocked to see us very close to the values we saw last January.
And Tyler, what's another report we saw on Friday?
Yeah, so another one of those kind of key reports that we get from the supply side is actually cold storage or cold storage stocks. So that's kind of that inventory that's sitting out there in cold storage, getting staged to potentially go out into the supply chain. And so kind of recapping some of the things that we saw in that report from NASS, total red meat stocks in cold storage as of December 1st were actually reported down about 3%, or about 25 million pounds from last year to 845 million pounds. Stocks for red meat trended below a year ago for each month in 2025. Not totally unexpected, largely because we saw beef and pork production trend even to or even below a year ago levels. And that kind of points towards just a stronger or robust demand picture that we saw in 2025. So we're looking to see if that continues into 2026. So looking a little bit more deeper into the report, as far as beef stocks and cold storage as of December 1st, USDA reported that down about 3.5% to 437 million pounds. So those stock levels during that fourth quarter actually trended well below a year ago on the beef side of things. So that signals, a lot of that demand pull leading into the holiday season. So which were not totally unexpected, but a lot of that demand pull was for those boneless beef cuts, kind of that for likely just staging for that holiday season there. Looking at the pork side of things, stocks as of December 1st were reported at just over 390 million pounds. That's actually a decline of about 1.5% from last year. Most of those declines that we saw on the pork side of things, as far as stocks go, hams were down 1.5% to 67 million pounds. Loins were down just over 8% to almost 32 million pounds. Picnics were down 16, almost 17% to 5.4 million pounds. Trimmings were down 5.5% to just about 46 million pounds. And so those declines actually more than offset increases that were actually seen in belly stocks, which were up over 8% to about 37 million pounds. Ribs were up over 2% to about 84 million pounds. And butts rose about 4% to nearly 23 million pounds. So kind of rounding out some of the discussion on the red meat side of things is lamb and mutton stocks, which actually fell 14% to about 17 million pounds in December. So a pretty good decline that we saw on the lamb and mutton side, and kind of a trend that we saw a good part of the year on that side of things. So moving over to a little bit more discussion on the chicken side of things as far as stocks go. On December 1st, chicken stocks were actually up almost 3%, up about 21 million pounds to over 800 million pounds as of December 1st. A lot of the increase on the chicken side was driven by just higher volumes of stocks for breast meat and thigh meat, which each rose respectively 2% and almost 17% in December there as of December 1st. These increases actually more than offset some declines that we're seeing for drumsticks, legs, and wings. Each of those categories fell 12%, about 16%, and 2% respectively as of December 1st there. Now, turkey stocks, interestingly, fell substantially there, more than 26% to about 165 million pounds as of December 1st. A lot of those declines were seen across the board in the reported categories. Whole birds were actually down over 30% to 44 million pounds. Breast meat was down 27% to 46 million pounds, and legs fell nearly 34% to 2.8 million pounds. So largely that decline in turkey stocks, not totally unexpected, largely just due to bird flu that took a toll on the flock early in 2025. So we're seeing some of the repercussions of that as we finished out 2025. So watching that pretty closely as we start 2026 here. So rounding out some of the stock discussion here, dairy stocks were actually mixed at the start of December 2025. Butter actually fell 7% to just under 200 million pounds. American cheese increased more than 2% to about 780 million pounds. Swiss cheese actually fell almost 5% to just over 22 million pounds. And then other cheese, so that would be like your mozzarellas, were about even with a year ago at about 560 million pounds. So overall cheese stocks increased just over 1% to nearly 1.4 billion pounds at the start of December. So to kind of summarize this cold storage stocks on December 1st, we're largely tighter than a year ago on the red meat side of things. But while chicken stocks actually rose from a year ago, but turkey fell substantially, largely due to that bird flu. But we saw dairy stocks were for the most part mixed. But as we start 2026, red meat stocks will be an item to watch, specifically as we finish the year on some tighter levels there. And so we'll see how this factors into the supply picture, specifically kind of looking at the demand profile and just the overall demand as consumers look at those prices in the retail case, sort of make some of their purchasing decisions.
And Tyler, Brandon mentioned the upcoming cattle inventory report, but are there any other big picture items that you're kind of keeping an eye on?
And, as Brandon alluded to, and you'd mentioned that there's quite a bit of anticipation for this January 1, 2026 cattle inventory report that we're going to get from NASS here in about a week. A lot of that is just kind of being driven by just kind of some of the expectations as far as what we're going to see from inventory levels, specifically looking at the breeding herd side of things, specifically beef cows and beef cow replacements. What kind of levels are we going to see there? Kind of a few mixed bag opinions there. A lot of it's just drought discussion that's going on in the western part of the U.S. That we're seeing here can change up a lot of the decision making for some of these producers. But also keep in mind some of the things that transpired over this last year from a trade standpoint with Mexico, that border being closed a good portion of 2025, how that sort of factors into the overall supply picture that we're going to get from USDA NASS, right? And a lot of this, that anticipation starts to factor into just overall available supplies in 2026 and to a degree 2027. And so we're just looking at, from a forecasting standpoint, what are those supplies going to look like for us? And that's going to drive a lot of our expectations through the rest of the year.
Tyler, Brandon, I appreciate you both taking the time to join us today.
Thanks for having us. Appreciate it.
Thank you for having us.
That was Director of the Livestock Marketing Information Center, Tyler Cozzens, and an agricultural economist at LMIC, Brandon Dodd. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we continue our show discussing the Kansas Land Values Book for 2025. And to talk about it today, we're joined by K-State Extension Land and Crop Market Specialist Megan Hughes. Megan, thanks for joining us today.
Thanks for having me today, Shelby. I'm excited to talk about some of our land values.
And before we jump into talking about the book, Megan, you are newer to K-State and the first time here on Agriculture Today. And can you tell us a little bit about yourself?
Yeah, so I joined the Ag Econ department about a year and a half ago. Well, I grew up on a seed farm in Northern Illinois, and then I studied at Michigan State and Purdue prior to coming here. So I'm having a lot of fun really seeing, it looks a lot different from home out here in Kansas. So I'm having a lot of fun learning about agriculture in Kansas and hopefully putting out some materials to help Kansas producers make some decisions.
And one of those materials is the Kansas Land Values Book. And what is in this book for producers?
Yeah, so the Land Values Book is a joint venture between the Kansas Society of Farm Managers and Rural Appraisers and the K-State Ag Econ Department. The book contains information about land sales from the fourth quarter of 2024 to the third quarter of 2025. And in that, we publish average land value estimates for the state level, the regional level, and then at the county level when we have data available.
And how do you collect all that information to put together this book?
Yeah, so one of the coolest things about the Kansas Land Values Book is that we use actual transactions to generate our estimates. So when land is sold, information about that sale is reported to the county. The county then reports this on to the state's Property Valuation Division, or PVD, which we then get from them to use in the book. So Robin Reed and Ann Ream, who is the Kansas Farm Managers and Rural Appraisers Sales Data Manager, and I go through a data cleaning procedure, which helps to make sure that we're capturing land sold for agricultural purposes in an open market sale, so an arm's length transaction. So we sort the parcels into irrigated cropland, non-irrigated cropland, and pasture and hay ground to be included in the analysis, we need at least 75% of the parcel acres to fit into the category of land. So we need it to be 75% dry land in order to count as a Puritan non-irrigated sale, for example.
And so when you've looked at all this data from the end of 2024 to 3/4 of 2025, what is the overall picture for Kansas land for today?
Yeah, so economists have been talking about starting some softening in land values for the past couple years, as that's kind of a function of farm profitability. And this year for the 2025 values, we're starting to see that realized in our published numbers. So at the state level, we're seeing slight decreases across all types of agricultural land compared to 2024. Irrigated land was down about 1.6%. Non-irrigated land was down 2.6%, and then pasture was down 1.3% for our state level averages. Of course, there's going to be just a huge amount of variation based on the region. So it's important to look at those local market trends for any decision-making purposes. And again, that's one of the great things about our land values book is that we are able to break down and report numbers for the 9 crop reporting districts in Kansas, and then also for the most part at a county level.
What have been some factors you've seen that have impacted what this price is as you've seen a little bit of softening?
So a good starting point for thinking about what impacts land values is that economic theory tells us land values are driven by the expected returns from owning that land, or what we expect to get from owning land. And 2025 was a challenging year for producers, particularly in the crop sector, right? We saw high input prices, low output prices, and that put a lot of downward pressure on farm profitability. Kind of a similar story we talked about last year in 2024. That kind of downward pressure on farm profitability then in turn puts downward pressure on land values. Outside of farm profitability, we're also operating in a much higher interest rate environment relative to some of the historic lows that we saw a few years ago. And so that will also put a downward pressure on farmland values. Other considerations, so that was kind of maybe the negative side. Maybe I'll talk about the positives a little bit. This has been a story for a while too, but farmland is attractive to institutional investors because it's not highly correlated with stock market returns. So it can be a good way of diversifying portfolios. And on average, farmland appreciation tends to beat out inflation. So it can be really attractive to, again, those outside investors or institutional investors, which might help to actually support farmland values, especially as we're starting to see this softening. And then alternative land uses like hunting or energy production can also influence values, again, in local markets.
Megan, you mentioned about how maybe the crop producers are feeling a little bit more financial stress than the cattle producers. However, all of agriculture we're pretty sure is feeling a bit of stress. But do you see that playing a difference in how much softening we see when it comes to cropland versus maybe pastures, or because we're usually diversified, it's all across the same board?
Since we tend to be so diversified, producers have to consider all of their enterprises when making decisions. So this extreme uncertainty, low profitability in the crop sector, I think will bleed over.
Any guesses for how we're going to see this year's land values play out for 2026?
Yeah, so in 2026, Kansas net farm incomes are projected to either remain steady or decrease relative to 2025, or decrease slightly. I would kind of expect then a similar story for land values from 2025 to 2026. So I expect we'll continue to see some softening, so either leveling off or slight decreases moving forward. However, there's a lot of factors out there that influence farm profitability and, again, interest rates. So we'll be keeping a close eye on trade policy, any federal assistance, and what interest rates do in 2026.
If someone's looking at this Kansas Land Values book, how do you see farmers and ranchers being able to use it?
Yeah, so there's a couple different ways that farmland values can be used by producers. So first, and maybe kind of your obvious gut instinct, would be for transactions. So I want to be sure to mention that our numbers are our averages. So they should be considered more of a starting point for any valuation rather than a precise estimate for any given parcel. Local market conditions and the physical characteristics of the land also influence the value of a parcel. So it's really important to consult with a real estate professional for land purchase or sale decisions. However, even if you're not considering a sale or purchase transaction situation, land values are still really important for our producers because land values are considered to be kind of a barometer for long-term farm financial health. If you look at the U.S. ag sector balance sheet, real estate makes up about 80% of farm assets in the United States. So because they make up such a large part of that balance sheet, any changes in land values can have really important implications for borrowing capacity, financial risk exposure, and even tax management strategies moving forward. So even if you're not buying or selling land, it's important to keep an eye on these things and use updated values in your financial projections and planning.
Is this something that producers could also share with maybe their landlord if they're wanting to find out more information about what's happening in their neck of the woods where they're owning property?
Absolutely. So as we're talking about this downward pressure in farm profitability, cash rents or rental rates become a really important sticking point. And so one of the advice we always give to producers when we think about rented land and managing your relationship with your landlord is that communication is key. And so this is one, source that you could share with your landlord to help them understand that, an increase in rent might not be feasible for your operation. So tools like this out of K-State can be really important in helping to manage that relationship with your landlord, which can kind of reduce some of your risk exposure if you're able to work with them on that.
If someone's wanting to find this Kansas Land Values book, how can they do that?
Yeah, so the first place, easiest place to get the book is actually online on Ag Manager. Farm management under land buying and valuing. It is the 2025 Kansas Land Values book. When I'm doing talks, I often also say, if you just Google 2025 Kansas Land Values book, it should be the first link that pops up for you. Then we are still in the process of getting the books printed out, but they should be available in your county extension office soon.
Megan, I appreciate you taking the time to join us today.
Yeah, thank you so much for having me, Shelby. And if any listeners have any questions, please reach out to me. You can find my contact information either on agmanager.info or the Kansas State Ag Econ Department's website. I'd be happy to chat with you if you have any thoughts.
That was Kansas State University Extension Land and Crop Market Specialist Megan Hughes discussing the 2025 Kansas Land Values book. As she mentioned, you can find the book by going online to agmanager.info, or I, of course, will link it also in today's show notes on agtoday.net. Also, in today's show notes will be Megan's contact information if you have questions for her and would like to reach out. You'll also be able to find her contact information on agmanager.info as well. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Monday show with another segment of Faces in Agriculture. And as the United Nations declared 2026 as the International Year of the Women Farmer, I'd like to take the time to recognize some women involved in agriculture. And we start off with a lady involved in agriculture in Wilson County, Tana McCarter. Tana, thanks for joining us today.
Thank you. I'm so flattered and honored that you asked me.
Tana, what is your involvement in agriculture?
Well, at this current time, my husband and we own a little, I call it a farm. I'm from the South. We call it farms. Here, you would call it a ranch. We have about 160 acres, and I raise cattle, goats, sheep, and chickens. And I have a little truck farm. I raise vegetables to sell at farmers markets.
And how did you get involved in doing all of this?
I was raised in the military. My father was in the Air Force. He was from Oklahoma, and he met my mother while he was stationed in Georgia. So I really grew up my whole life. The little argument was, where was my dad going to retire to? And my grandfather sweetened the pot by giving my father 50 acres in South Georgia. And I was about 12 to 13, and we began raising goats on a swamp in South Georgia. And yeah, I was really active in 4-H as a kid growing up, and I was just called. Sometimes you're just called. I always loved livestock, the woods, and wildlife, and farm animals, and dogs. I was a big 4-H dog care and training person.
What have been some of the challenges you faced?
In the early 80s, this is the time when the farm policies for the United States were go big or get out. And during those times, my family, my uncles, lost our farm. So basically, we just had our little 50-acre farm. That's not enough to support a family. And so my father worked full-time off farm. So did my mother. And so my agriculture experience became very small scale. A lot of 4-H projects. And while everybody around me was involved in agriculture in South Georgia is a huge row crop, not so much with the livestock, unless it was a hog farm. But they were vegetable production and tobacco and cotton. And so at 14, I went to work in the fields. And so I got a really good agronomy base there. But my first love was always livestock.
From your perspective then of being involved in agriculture, what has it been like?
It's a wonderful life. Well, being female, I did have a little trouble because I can remember my father saying, "Little girls don't do that, baby. Little girls don't do that." And I certainly did it full of heart. I rode a lot of horses, and I had my chickens, and I gardened. And so I had a little trouble breaking in because nobody took me seriously. But my grades were good. I attended college, and I met this really great guy. And we very much had the same kind of goals in life we both wanted to farm. We both wanted to ranch, and we wanted to raise our children that way. And the rest is history.
And so as you look forward in agriculture, what makes you excited?
I have always been a little bit of a tree hugger. I have always knew that when you manage your land and your crops and your livestock in very natural or, I don't want to say organic because that's not what I mean at all, but you also encouraged wildlife. The land improved, your native plants improved. So I am so excited about the sudden upsurge in interest in regenerative agriculture, and I have embraced it fully, and I am looking forward. I've been applying a lot of those principles for years, but I am really looking forward to my golden years doing regenerative agriculture. We already rotational graze all of our livestock. I've gotten to put in a lot of birdhouses. Who would have thought I would have become such an avid bird watcher, but I am. So like I said, I'm really excited about the things to come in regenerative agriculture.
For anyone who's wanting to take a look into agriculture or learn more, what's your recommendation for them?
YouTube. What a wonderful, wonderful tool. I have spent the last 10 years, I've had some health issues, but it's been my philosophy to try to learn something every day. Even if I don't agree with it, I need to try to learn something new every day. YouTube has allowed me to do that. I've traveled the world, seen different lifestyles, and never had to leave my recliner.
Tana, I appreciate you taking the time to join us.
Thank you for asking me. I enjoyed it immensely.
That was Tana McCarter, who's involved in agriculture in Wilson County. That's all we have for you today on Agriculture Today, but we'll be back with more for you tomorrow.